Tariffs are finally getting figured out, but there's been a lot of volatility and a lot of people getting hurt, especially in yield farming. A lot of people going about it the wrong way. So in this video, I'm going to give you guys the latest tariff updates. I'm going to briefly explain what yield farming is in case this is your first time on the channel. And I'm going to show you guys and tell you guys how you can go about yield farming with this market that is influenced by tariffs right now more than anything, more than interest rates, more than GDP, more than inflation, more than anything. All right, so per usual, none of this is financial advice. And lastly, before we get started, we did release the world's first crypto-themed album called Crypto State of Mind. The link is in the description. It's live on all platforms. Definitely give it a listen if you haven't. So without further ado, let's jump straight into the content, starting off with the tariff updates. Now, I did make a macro video on the Know It Owls YouTube channel going through all of this. So if you want a deeper dive, definitely subscribe to Know It Owls and go give that video a watch if you haven't. But basically, the US has pretty much come to some agreements with the UK, which is huge. Well, I'm not going to say it's huge because the UK represents just 3% of trade with the US. But they have it so that it's 10% tariff is still the same 10%. And the UK is like, oh, this is great, which is kind of funny. It's 10% on the first like 100,000 automobiles, and after that it goes up or something like that. Both sides seem to be pretty happy. Like I said, it's 3%, so it doesn't represent a large portion of trade here in the US, but it's just a matter that they came to an agreement, and the market likes certainty. Okay, and it kind of signals that things are going to get figured out in the future. Now, going over to China, the United States and China have come to an agreement as well. The United States is cutting tariffs on Chinese goods from 145% all the way down to 30% for 90 days. Okay, and keep in mind, it was a 45% standard. So this is telling me that the US is serious and they want to strike a deal. And then China came back and lowered their tariffs from 125% all the way down to 10% for 90 days. Okay, and then also China is opening up, giving the US a chance to do business in China. And President Trump said this could be like the biggest win in the whole thing, because now the United States will be able to do business in China, and in this capacity that they're talking about hasn't been done in our lifetime. I don't even know if ever. So this will create consumption in China, right? And help their economy. And it also help the US because it'll create a higher demand for American-made products. Okay, so now with all of that in mind, I'm going to briefly explain what yield farming is, and I'm going to talk about how you can go about yield farming through this terrific environment. Yield farming, put simply, is just a way to get a yield on your assets. It's multiple ways to get a yield in crypto. You can stake on a blockchain staking contract and get a yield to secure the network. You can put your funds on a borrowing and lending platform such as Aave and get paid for the platform to facilitate borrowing and lending. You can put your funds on an insurance platform such as InsureRace or Nexus Mutual and get paid passive income to facilitate insurance premiums. But the most profitable way, and the way that we talk about on the channel all the time, is providing liquidity on decentralized exchanges such as Uniswap, such as Aerodrome, such as Radium, such as Orca. Deposit your funds in pools, for example, ETHUSDC, and you get paid anytime someone swaps from ETH to USDC or from USDC to ETH. Okay. Now, there's this thing called impermanent loss, where if you pair two assets, like let's say you're in ETHUSDC, and your range is from 2,000 to 3,000. Anytime ETH is within that range, you're getting paid. But if it goes outside of that range, that's when impermanent loss comes into play. So if you're in an ETHUSDC range from 2 to 3K and ETH goes over 3K, well, you're in 100% USDC. So the impermanent loss on the upside is foregone opportunities, because you would have made more depending on your time horizon had you just held ETH. And the impermanent loss on the downside is if it goes below 2K, now you're in 100% ETH. Right? So yield farming is essentially a limit order for the underperforming asset. And a lot of people have gotten burned from the tariffs because they weren't going about it correctly. So I want to kind of shed some light here. And I'm just going to go out and say it. Yield farming and providing liquidity, it does not give a fuck about tariffs. In fact, it actually loves it if you just go about it the right way. So here's what you have to think about. Tariffs create volatility, major volatility. Right? I'm going to show you some dates on when some tariffs were announced and what it did to the market. But you have to keep in mind, volatility is how you make money in yield farming, right? If everything's just going sideways, yeah, you can provide liquidity in an extremely tight range and make some money depending on the volume to TVL ratio. But you really make most of your money on big candles, and that's big green candles and big red candles. You have to keep in mind, blockchain technology is an all-purpose technology, and this is a story of adoption. It's going to eventually affect every single industry. So there's going to be things that get announced, things that happen in TradFi in the world that increase volatility and make prices soar to the upside and down to the downside. But equilibrium is always restored and things always eventually end up returning to the mean. So now let me show you how you could have made some great money based off of the previous tariff announcements. So this website basically shows some of the tariff announcements that Donald Trump has made, and we're going to look at the market. January 26th is when he threatened the 25% on Colombia imports, etc. You got February 1st, he signed an executive order to impose tariffs on imports from Mexico, Canada, and China, 10%. Right? The 3rd, he agree to do a 30-day pause against Mexico and Canada. The 4th, man, he was just announcing shit every day. Cat Williams has this video where he's talking about how Donald Trump will wake up and sign some new shit every day. I thought that video was hilarious. So then February 10th, he announced plans to hike steel and aluminum tariffs starting on the 12th, and then reciprocal tariffs on the 13th. And this was the big one, right? February 25th, he made an announcement. March 1st, March 4th, March 5th, 200% tariff on European wine is crazy, right? So he was basically announcing his tariffs all day long, and that's why the market has just been dropping. So if we go, he won the election in November, right? November 4th, and we saw ETH and Bitcoin and crypto go on a rally. He was inaugurated around the 20th, and then he started fucking shit up with the tariffs, and we saw things just drop and drop and drop. Now, I'm going to give you a scenario on what you could have done had you just held ETH, right? Or if you provided liquidity for ETH and how you could have made more money. So if you were holding ETH right here at around 2,700 when Trump started getting crazy and you just held down, 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 right? We came back up. If you just held it out, you would have been back to break even. Now, had you provided liquidity from, let's say the top here from 2851, 2900, all the way down to the bottom at 1400, you would have experienced an impermanent loss on the way down. But keep in mind, you're generating fees this whole way down, and then you're generating fees on the whole way back up, and you actually were back at break even pretty much. So the person who just held their ETH all the way down and back up, they're just going to be back to break even. But the person who put some of their ETH in the liquidity pool and provided liquidity on the way down and generated fees all the way on the way down and on the way up, you're actually not going to be, you're going to be back break even on your principal amount, but your fees will put you in profit. And you didn't have to do a damn thing but just sit there, literally. So it's like, there's going to be announcements, there's going to be things that happen, like I said, that's going to push the market up and down, but things always return to the mean. And it's not as hard to predict a range as it is to like make trades and say, oh, this will happen based off of this. So now I want to talk about what you can do in this 90-day period. I am expecting some major volatility in this 90-day period because, you know, it's a pause on tariffs. And to be honest, I do think that they're going to come to a deal that's going to make the market happy and we'll be able to avoid a recession and, you know, get the economy stronger and keep it strong and have a better relationship with China. But it's not guaranteed. They could just come back and be like, you know what, actually, fuck this. I want to hike it back up to 130%, and China will retaliate, and then it'll delay the bull market. But here's what you can do. Let's say you're not sure, like me, and you're like, okay, I'm bullish, so, you know, I want to provide liquidity to the upside. This is what I call a tranching strategy. You can provide liquidity from, let's say, current price of, let's just say 2,300, right? 2,300 all the way to 4K. So at the end of 90 days, if the market blasts up to 4 or 5K previous all-time highs, and again, you can raise it as it goes up, you're accumulating fees, but you never know what's going to happen. So another precautionary thing that you can do is to set multiple ranges, right? You can set it from here to here, right? So you have your two ranges. You have your 2,200 all the way up to 4K, and you have your 1,100 all the way up to 2,900, right? And right now, if you were to do that, you would be in range on both. Let me clear this out so you're not confused. Right, so just look at the red lines. Anytime you're in between these red lines, you're making money, and anytime you're between these green lines, you're making money. So if 90 days comes and things kind of go to shit and they don't come to an agreement, you'll make money on the downside as things are going down. And eventually, we know ETH is going to eventually get back to all-time highs. We don't know when, but it's just a matter of when, not if. And the longer, the better. The more fees you're able to accumulate, the better. Like if the market does one of these and like, oh, tariffs suck, and it just like consolidates here for a while, and you just stay in the pool, whenever it does come back to your break-even point, you're going to be in profits. The longer it takes, the more profit you're going to make, right? And if in 90 days things are looking good, hey, you're still in range. So either way, you win. There's literally no way to lose. The only thing I would say is that your big win will just be a little bit delayed because obviously, you know, if you've been in crypto for a while, I'm sure you're holding a bag of ETH, and we want to see ETH go to all-time highs, but the longer it takes, the better, because it just gives you more time to accumulate more ETH so that you will have more to sell once the price does reach all-time highs again. So guys, to conclude, it doesn't matter what's happening in the world. Just pick a range, and you're just getting paid to be patient. You're getting paid passively, right? So I hope it takes a longer time. I hope the bull market's delayed so that I can just accumulate a lot more and have a lot more to sell. So guys, if you want to learn how to manage your portfolio like a professional alongside professional coaches and a strong community with all the tools and resources that you need, you got two options. You can either click the link in the description and book a free strategy session, and you'll talk to me and we'll see if our program is a good fit for you. Or you can click the other link in the description and join our community for free. You'll get access to all kinds of cool things. So with that, I am going to go grab some dinner. I am here in Zaragoza, random city in Europe, and tomorrow we are headed to Lisbon. If anyone's going to be at NFC Lisbon, let your boy know. We'll love to meet up with you. But with that, thank you so much for tuning in. I love every single one of you watching, and I will see you in the next video. Take care and trade safe.